welcome to our wonderful panelists, and they are going to be the real star of the show today. And we've got Paul, who's my partner, Paul Epping. So he's joined us all the way from Amsterdam, from Netherlands, but south of. We have Feroz Anaula, we are old friends from many years. He's a partner at Roland Berger, and I'm sure he'll introduce himself later. We have Ali Nanji from Microsoft, and Amal from the Commercial Bank of Dubai, and finally Yaroslav from OpenEXO, who are one of our co-partners in this entire process and have been great associates and sharing a lot of knowledge and community and infrastructure. And Yaroslav has been chairman there, has been one of the key people behind all of that, working closely with Salim Ismail, and now he is the Chief Learning Officer, and he's helping us to basically build this learning platform as we go out. So, so these are our panelists. Today is really the official launch of Future of Finance 5.0. We are doing this in association and partnership with the DIFC Academy. And we started pre-COVID. We were going to do this physically, then it became digital but long. Then we decided, no, let's make it tight, let's make it focused, and make it very targeted for some specific areas that we will be talking today. And what we are today, this group that's sitting here, is really a microcosm and a reflection of every single thing that's going to be discussed throughout the next 4 weeks. We have correspondent banking and traditional banking with Amal. We have technology and execution and digital transformation with Feroz. We have a technology infrastructure, cloud-based technologies, all the rollouts and stuff, including startups with Ali at Microsoft. We've got Yaroslav talking about culture, leadership, and some of the touch points. And Paul is going to help us with exponential dynamics as we go forward. And this really is the agenda of the full program as we go through. So that's the basic background. The program starts today. We will have one of our first formal 2-hour sessions next week. And the way the sessions are divided is about an hour of learning and you know, lectures, presentations, etc., and about an hour of interaction, which will be case studies, polling, panelists, and in addition to the person leading each session in each episode, we will have top global CEOs coming in. We will have regional and global domain experts coming in, and the idea is that we will have up between 15 to 20 people joining us at different stages over the next 4 weeks in our main sessions. And in addition to that, we have 2 bonus sessions. One session is with, hopefully in the final stages of finishing, is with Microsoft on fintech startups, and another one is on digital marketing. Because we also wanted to make things practical. So yes, we'll show you what to do, but guess how the hell do we do this damn thing? And the execution part. So not only are we going to be shifting mindsets, we also will provide with specific tool sets that will move forward. Now, interestingly enough, a lot of the people attending today and the ones that we have been receiving feedback from, they are not just in the financial sector. A lot of them coming in from energy, surprisingly and interestingly, and individual corporates also are joining in. And that, I think, is really important for what we're going to be discussing over the 4 weeks and starting from today. So what I'll do, with your permission, is share some slides, and this will be essentially the core to sort of set up the tone and the mood and you know, for this session in particular, and for the whole program in general. So I thought we'll use a nice rocket going to Mars and the whole thing, but really, as a launch day, this is our official launch point, and that's why we're doing that. Now, this is a beautiful coral reef, and when I look at this, the word that comes into my mind was harmony. But when we really go deeper into it, the word that really resonates is trust, psychological safety. And this word is going to resonate throughout our session today and throughout the next month, because trust was important, has always been important. But now it's 10 times more important as we move forward. But alone, it doesn't do anything. We need ethics and empathy and values and all those components to come together. So this is going to be one of the core themes as this pandemic happens, is how we build trust, collective intelligence, collective consciousness, and basically look at all of the pandemics of the virus, of loneliness, of despair, of fear, and misinformation, all of them coming together, and how we pull this whole thing together. Now, the question while you're watching this, just for you to quickly reflect, is what has changed in you in the last 5 months? And I dare say a lot of these factors have changed. Things have been absolutely accelerated. And I think this is one of the key things we need to be looking forward as we go into the future. Now, we do a lot of scenario planning and scenario analysis. I'm sure you do too in many, many ways. And the way we are looking, Paul and I, we do this work, is we take a 3 to 6 month horizon initially, which is really now. We are towards the end of the 6 month period, which is the oxygen mask is on, recovery and action at this point in time just to survive. The second is really what we are getting into in September, October time, and that is to build our backbone, build our resilience, build our resourcefulness as we go forward for the next, say, 12 months or so. And then 12 months after that, we need to be reinventing again, because by that time, hopefully we will have a vaccine. Hopefully we will have settled down and moving forward. And then we need to look forward to new things, but massively accelerated. And we'll have a few data points as we go forward. That is in terms of the overall scenario. Now, why is the world changing so fast in terms of digital transformation? Firstly, we have all of these multiple accelerating technologies in different layers that are coming together, which help to digitize the whole thing. Digitization is effectively something that is information enabled and hyper-connected. That is what makes the product digital. But once you get on that digital curve and you start on Moore's law and the doubling pattern, things just fundamentally change. You get societal disruption on one side, but on the other, you get massive abundance. And there are, at this point in time, something like 25 technologies that are coming up, which are all reaching what we call the that inflection point where things just completely take over, and that's the Gutenberg moment. In 1451, Gutenberg came up with the printing press, and everything changed. Commerce changed, education changed, religion changed, it all changed. One. Today we have 25 of them, of which these 15 are fundamentally happening in the next 2, 3, 4 years. So they're all coming together. So the unintended consequences of these things happening together are even more. Now, the reason I wanted to share this is that there are many of these breakthrough technologies and Gutenberg moments in our financial world. Artificial intelligence is directly going to affect it. Blockchain, quantum computing, and augmented reality, and all of these elements will fundamentally and directly affect the banking and finance world that we're talking about. Then we look at robotics, emotion sensing, Internet of Things and stuff. Not to mention the others that are there, which will be in the adjacencies. So all of these things are affecting us. So therefore, we're living in very interesting times. Now, of these, there are some tipping points for technologies over the next, 12 to 24 months. And localization of production, the supply chain coming closer to your homes, telepresence, the work that we're doing right now becoming different. These are the opportunities that are there, which are absolutely imminent. Now, one of the folks who at the moment is doing some crazy, wacky things, but bottom line is his thinking. Elon Musk plans, looks 10 years ahead, doesn't worry about the chasm in the middle, and then builds towards that and hope that things will keep developing. So when he came out with Hyperloop, he didn't know how the hell to get there. Same with Tesla as a self-driving car and all of his other innovations. And he wasn't an expert in any one of them. That's another one of the key. But the key thing here for us to see is we may not be able to see around the corners properly, but we need to be projecting ourselves on an exponential curve. Now, these folks can see it. All of these companies are going into healthcare, but guess what? All of them are also going into financial services. Now, in the last 3 months, more growth, this is a McKinsey chart, we had more growth in terms of value and penetration in the United States on e-commerce than the previous 10 years. 3 months versus 10 years. I know that this was quoted by Ali, that CEO of Microsoft, Satya Nadella, said the last 2 to 3 months of coronavirus was as much digital transformation as the previous 10 years or so. So therefore, the acceleration is massive. Bottom line is we are not ready for it. Companies are not prepared. And this is a research that was done pre-COVID, and I dare say it's going to be much, much more different. So where's the big battle? The big battle is between incumbent banks and the startups and organizations and corporations that are coming up. If the incumbent bank can innovate faster or before and execute before and faster than the startup, then they win. 8 times out of 10, they're going to win. If the startup can get critical mass and core distribution, they can move much, much faster. Now, innovation is really hard, whatever you want to do. So if you compare the incumbent banks to startups and fintechs, what we see is that the incumbent banks are stuck because they're spending 75% on IT maintenance costs, and they have a bricks and mortar responsibility and so on. While the fintechs and the startups have issues around regulation and complex infrastructure. So this thing is there. Now look at the 75% data number. In the United States, the trust factor for banks is 28%. Only 28% of the people in the United States trust their banks who hold their money to be fair and honest. It's really awful. And you are now then spending 75% to maintain things that people don't like. And that is something that needs to be done. Both Feroz and Amal, I'm sure, are going to be addressing that in their discussions. So I took a bank and said, well, how can we unbundle a bank? This could be Emirates NBD. This could be even CBD. In other words, you are in all aspects of banking. And they make it, the whole thing is so complex and in so many different layers. And in each layer, there are multiple plethora of organizations that are addressing a specific layer. And that's why it's so difficult to integrate and to be able to penetrate this. And the regulators are fine with this. And this is how the banking system has worked and is protecting them. What is changing is that most of these layers are now, because of Amazon Web Services and various other cloud-based technologies, all of them are available as a service. So where each one of these things, Centrelink is fraud as a service, Compliant Advantage is regulatory advantage, elements as a service together in one aggregated space. So again, both, I think all of the people there, and especially Feroz and Amal and Ali, are going to talk about exactly how this thing starts affecting. Now, everybody's building ecosystems. Masters of the ecosystem is Amazon, and they have built so many financial services organizations and using the online capacity to basically build commerce. Disruption. Apple arguably is one of the most creative people when it comes to disruption, and that's where their business model applies. However, I'd like to go further than that, that most banks, and I'll challenge the bankers who are on the call and others, is that most banks are doing digital development and digital transformation by analogy and by iteration, and just doing it one step at a time rather than projecting it forward. Versus something like Yuebao, which is a savings mechanism used in China by Alibaba and Alipay, and Yuebao with Taobao, which is their e-commerce engine. They have created a $350 billion money market fund, which is the world's largest fund by almost 2.5 times. JP Morgan Chase is 140 billion as a US Treasury bond fund. And the only way they did it was because people were saving money on them and on their phones, and they had idle cash lying there. And Jack Ma saw it and said, hang on, we can do something with it. So he changed behavior. So with one click, you can save $10, $20, no branches, no regulations, no integration with anything, biometrics and facial recognition being used to activate their digital onboarding, and they did that. The idea for today and 5.0 is that we need to have a new set of thinking. And Jack Ma is building the biggest financial institution in the world in terms of, and financial, which is not a bank at all, is basically a super app, because it will have trillions of dollars worth of value, billions of customers, hundreds of countries, and so on. So, and they're not even a bank. And how are they regulated? I know the regulators have been fairly lenient in China because they just took a little leap ahead of that. And I dare say Feroz and Amol will have a lot to say about this. So Final points. Vision 2025, when we look at Finance 5.0, we'll talk about that, and is that daily interactions by 2025 digitally will be greater than all human interactions for the entire year. So all the big branch networks and so on, you know, they are going to be outnumbered and outperformed by the digital transaction. AI advice greater than humans, and robo-advisors advising over $100 trillion worth of assets. So this is the background, what's changing. So what I did was basically we're in banking 3.0 to 3.5 right now, working towards 4.0. The 5.0 goes beyond that. It becomes ubiquitous, not just omnichannel, but ubiquitous, hybrid, behavioral, experiential. So what I did was, with all the research, I said, let's put together the big 10 rules, and that's how I will end the 10 rules of finance and banking 5.0. The first is that as we are looking at strategy in the future, let's look at the human aspect, the behavioral aspect, the contextual and experiential aspect, because more and more this will become relevant as we get digitized. Then step back and look at the foundational principles of design, first principles thinking. So when we look at first principles thinking for banking, the core utilities of the bank is a stored value mechanism, an exchange mechanism of transactions, and also lending and credit. You put a little wallet around that, put it in the cloud, get a mobile phone out there, and you've got yourself a bank. Who cares about branches? This becomes the core utility with which we have to work. Now, in this, what I'm suggesting or I'm challenging is the future of banking is not banks, but it's services around the utility and building hybrids around that. And we'll challenge that question throughout the next 4 weeks, and we'll get to some answers there. My next thesis is, controversial as it may be, that stop hiring bankers. Because, you know, that's all fine. But if we need data scientists and neuroscientists and psychologists and even musicians and teachers, because, and I'm sure you're going to ask me, and I'll leave that as a bit of suspense. So what else? Scale and marketing. We can only build scale if it's tech. And so we have to think tech, not banking, when it comes to scale. Super apps, podcasting, data, utilization of data, blending physical with the digital aspect. And whatever we do, the core business is our core business, and that can increase to 10%. But if we need to grow into the future, we must apply 10x. And change our cost structures, just like Alibaba did with Yoibao, just like Amazon is doing, is that if we think platform, if we think ecosystem, we think free, we think experimentation, we must be able to bring down and think, how can we make something free, and then build a service around that. And this is going to become ubiquitous in the future. Rule number 9, anything non-touch and scale, and that will just go through the roof. And finally, optimize your core. 80% of your business will always remain the core of your bank. But go for the edge and go crazy, that in 5 years' time, your 20% reverses and becomes 80% of the business and the value, and you always stay ahead. So these are my 10 rules of finance and banking 5.0. And to me, the future is a hybrid ecosystem, which includes tech giants, unicorns, like Ant Financial, WeChat, Tencent, the fintechs that are coming up, and of course the banks. And this is going to be the tension, this is going to be the tussle as we move forward. So the business models, as we look at building anti-fragile, resilient, scalable models, will become digitized, and I dare say Feroz is going to talk a lot about that. And what Paul and I are always talking about is a microscope, which is core business, looking at your day-to-day business, but a telescope. And a lot of the work that we do is actually become your telescope, and we sit with you and we talk about our telescope. So basically, those are some of the remarks, just to sort of throw some controversial issues out there, just to get things moving and get things going. So I thought we would do that. Now, today's speakers, you've already met them. This is who we're going to be talking about. And we go. Let me just stop sharing and look at some of the polls. So these are just some of my remarks. I hope I've created some level of discomfort, because if I haven't, then I haven't done my job. So let me look at a couple of polls, and that'll give us a good idea of, by the way, before I go on to a poll, any thoughts, any comments? Anybody? Silence. Okay, I've stunned everybody. Well done. All right. First poll, and this is again to set up the basics of this conversation and moving forward. And the first is that which enabling technologies, so I'll launch the poll, and that is that which enabling technologies banking and insurance firms most likely adopt in the next 3 to 5 years to help accelerate business transformation. And we've got some elements there, so people can adjust, can fill that. The second one, what impact do you think digital financial services available through smartphones or mobile money will help in raising people out of poverty? And this is on financial inclusion. So this is a single choice answer. The first is a multiple choice. The third question is, which one of these strategies do you think most traditional financial service institutions will primarily try to take in the long term? This is very relevant for Amol. I think if you look at this, by the way, the panelists can also vote, so you have the right to do that. So this was partnering with other and acquiring fintechs, rationalize to only offer profitable products, become just the back end for some corporations. These are the kind of options a lot of people are looking at. And finally, what are the biggest shifts in power in the financial services that you would expect by 2025? And it's a multiple choice question. So while people are filling it up, these are 4 fairly long questions. Let's give them a few minutes to work on them. Any thought, guys? So what do you think are the biggest shifts in power? Amol, in the financial services sector, what do you think? Is it China and South Asia become the major players in fintech? Africa is the best place to invest. Banks will become market leaders, again, with blockchain and decentralized finance startup.
Yeah, thanks, Tariq. I think one of the questions that you asked was about, which of these strategies would actually work where, traditional banks would look at either, partnering with or acquiring fintechs. I think, instead of having a multiple choice, I would just pick up that, right on top, answer. I think partnering with a fintech or rather acquiring a fintech is something which, any bank would look at. And from our perspective, we've already partnered with one of the fintechs, and
yes.
we are working, very, very aggressively to launch a particular product. So you will very soon hear from us. So I think that is one of the core areas where banks are looking at it. I mean, look at any other banks in the country. Everyone is looking at they're learning from the fintechs, right? Because banks being banks, they have several other things to do. While fintechs are there predominantly to disrupt the market. We are not here to disrupt. We are here to make money and make money with making sure that all the risks are covered and even the regulators are kept in mind. But fintechs really don't care. They really don't need to care, and hence sometimes a lot of financial institutions have actually learned from them and have actually gained, and hence.
So let me tell you what the consensus is at the moment. Partner with an acquired fintech. 71% of the people want to go. That's the leader at the moment. And the second one is look for opportunities to play in the decentralized financial space. Is the second at 31%. So those are the two that really became the key leaders. And on the biggest shift in power in the financial services sector, the winner at the moment, 55%, is China and South Asia will become the home of the most important fintech companies. And by a long margin, they are ahead. And everybody else is around 20-25%. So that's a little shift. And the third one is which enabling technologies will most affect, that's fairly obvious. And AI and advanced analytics have the lead at 58%. Behavioral analytics is there at 46%, also at number 2. So anyway, so these are just some thoughts that I thought would be useful to throw out there. Feroz, any final thoughts? So I've shared the results with everybody. So that at least
no, I think look, the way you draw up the window is that there are 2 bookmarks. One bookmark is incumbent bookmark, and the other bookmark is startup.
Yeah.
I appreciate that, but I think you're missing one major component, which is basically adjacencies. No, adjacencies, which are completely non-banking players who have nothing to do with banks suddenly realizing that they can play the game. And it's not tech companies. It could be completely non-tech companies playing in that space. So I think we should also think about those. I'll share with you a couple of examples of how things are evolving in that space. Look, nobody likes disruption. Nobody likes to be disrupted. So when things start getting disrupted, people react. And the way they react is they look at proven methods and proven areas to go into.
Yeah.
But they do it in a very, very defined and deliberate manner. And we'll share with you some of those examples of how things are happening.
Firoz, I actually agree with you entirely. And one of the, obviously I didn't mention it properly, but the idea was that because it becomes so easy to innovate in the financial/technology space, it doesn't have to be a fintech. Any corporation and anybody can, by definition, start getting into it. So that is really an integral part of my thesis. So we are agreeing. Perhaps I just missed saying something about that. Ali, any quick thoughts before we pass it on to Yaroslav to look at the leadership and the culture side of things?
I mean, I think, and I'll speak more about this, but the common denominator across everything that's been mentioned today has so far been the technology aspect of things. And I think using that platform in its most effective manner is going to be the key. Of course, the platform is the platform. What you do with it is completely up to, you know, the individual entity working with the platform and utilizing the tools that they have available. So I think between that and the culture and the people, as you mentioned, Tariq, those two at its highest levels are the two key ingredients towards success in this arena. And I think with those two, you have a foundation upon which you can then move forward. And but you know, pointing out to some of the things that Amal and Feroz also mentioned, I think there are so many other factors to this that we tend to oversimplify. But I would love to share my perspective as an executioner on the ground, just to see just to show the team what my view is.
I wanted to throw some balloons in the air so that at least we can have a discussion. But anyway, let's keep this thing moving and pass it on to Paul. Paul, if you can introduce Yaroslav, he's an old friend of yours, and let's talk about culture and exponential dynamics.
Thank you, Tariq, for your introduction and overview of what we are going to do in this exciting program. And yes, I'm very excited to announce Yaroslav, a good friend. And actually, what a lot of people don't know, Yaroslav is my trainer. So I'm a head coach and a coach in the EXO world, and Yaroslav was my trainer. And everybody in his life needs some coaches. Well, he is one of them, and you are the other one, and I have a couple of others. But Yaroslav is not only a guy who's very, very involved in the technology and exponential technologies as an alumni of the Singularity University, is working closely with Salim. But what Yaroslav sets him apart is his deep thinking about what does that mean for leadership in the future in this, let's say, in this tsunami of exponential technologies. Yaroslav, the floor is yours.
Excellent, Paul. Thank you very much, and greetings to everybody. That was such a kind introduction. Thank you very much, Paul. It's a pleasure to be here, and thank you for the invite to Paul and to Tariq, and looking forward to this. So I will share my screen, and Tariq and Paul gave me a task to speak about what all of this means before we get more kind of finance specific in the rest of the webinar, to speak about what does all of this mean for leadership, organizational transformation, culture. And I only have 5 minutes to do that. So I think I'll try to be very, very quick and just to drop in some key points that can maybe help you to look at and think about these topics. So Tariq had already spoken about technologies. I actually think there are 3 major disruptive forces that every organization and every leader today needs to be on the lookout for. Technology is definitely one of them, and Tariq has spent a good amount of time on it already, so I will not speak about that. But that's a huge disruptive force, but it's also a huge opportunity, the same as the 2 others. The second is actually sustainability. We are hitting the limits of what we can manage and how we can actually live on this planet. And I believe that every organization in this decade of the 21st century will need to find a position towards how its activities are actually dealing with sustainability and hopefully even regenerating the planet towards a more helpful way to be here. So that's a second big factor, big disruption, also a big opportunity. Things like circular economy, donut economics, and many other frameworks are here. And the third one is actually societal changes. And this is big demographic changes in society, but also for anybody working in an organization, it's how customer preferences are changing, what people want, how they want to be communicated, how they express themselves, how they connect with each other, on a political level, how they want to be governed, where they want to live, and all these kind of things. So there are actually massive kind of undercurrent societal changes happening in society. So technology, sustainability, and society are three big disruptions, but also three big opportunities. So in order to deal with these in the next kind of in the time going forward, I think it's for all these reasons, I actually think that it's fair to say that the future will not just be a mere extension of the past. It will actually be radically different, or at least it can be radically different if we fully embrace the opportunities ahead of us. So in order to deal with this, I think it's quite important to have a bit of a holistic framework on how, when you're in an organization and you're a leader, you're leading an organization, how you can look at things around you. And this is a framework I have actually been using for over 10 years. It's coming originally out of the Integral framework. And it basically says that in an organization, if you want to change things, there are essentially 4 key elements that you need to look into. So individual invisible elements, those are kind of what happens kind of in the internal world, all of the people in your organization and in the leaders as well. So thoughts, emotions, belief, values, things like that. So those need to shift to be able to embrace the new world. Then you have things that are visible, but also on the individual level, things like actions, decisions, behaviors, what actually happens, what do people actually do, not only how they think and what they would like, but what they actually do at the end. Then you have things that are collective but invisible, things like relationships, culture, the hidden rules in an organization. This is actually the whole culture, which could be loosely defined, the way we do things around here. And then you have things that are visible but collective, things like the strategy, the processes, the reward systems, operational, kind of how you run the company. All these things are collective visible. So among those 4 things, actually, you can capture the entire organization. And if you want to do things differently, if you want to react to these disruptions, if you want to be more agile, you actually need to address all 4 of those. So you need to change how your people think, what they, how they behave, but also how your culture works, how your strategy works, how your business model works. All of these need to be addressed at the same time, because if you only change the business model, but don't change the mindset of your people, it's just not going to work, right? So this is, I think, quite a helpful holistic model that hopefully can help you to think of the kind of changes you might want to make. And essentially, if you look at this, the top layer is kind of the leadership layers, right? So those are leadership, but also all the people in your organization as individuals. And the second layer is an organizational layer. So let me just spend the last couple of minutes on those 2 layers. I'll begin with the organizational one. I've been actually working with Salim Ismail for the past 5 years. He's the author of a best-selling book called Exponential Organizations, which actually is a cutting-edge research into about 200 of some of the most innovative and iconic companies that are around. And Salim has been asking, if technology has the potential to scale and scaling exponentially, can actually also our organization scale in the same pace? Can our organization scale exponentially? And he has found out that the most successful companies that do that actually are using 11 different attributes. They all are purpose driven. They have something called a massive transformative purpose, and you have some examples here. And then they all have 5 outward facing attributes, which help to access the abundance presence in the market, like Airbnb is accessing the abundance of houses. They don't have to build those houses. They're just tapping into it by kind of a smart interface. So there are 5 externally oriented, which are staff on demand, community and crowd, algorithms, leverage assets and engagement. And then there are 5 internally focused that actually help you as a company to manage that abundance that you're tapping into, which are interfaces, dashboards, experimentation, autonomy, and social technologies. And actually among those, you have kind of maybe the left side is more looking at the bottom right quadrant of the the framework, and the right side is more looking at the culture, right? And how the culture actually, how the environment of the organization changes. So this is a one useful framework, and I will spend much more time on this in the program itself when I do have more time, which I don't have today. But I highly recommend to look at the book Exponential Organizations, available all over the world. It's actually on track to become one of the best-selling books, business books of all times, which is quite exciting. And second layer of this is the leadership layer. And here actually I have been performing a similar research, which is kind of still in the works, but I have been looking, what is actually the answers for leaders, for leadership, analogous to the attributes that Salim identified in organizations. And first of all, I need to define what leadership means. So this is a definition, it's not the definition, but I think it's fair to define because leadership means different things for different people. So the way I look at leaderships is that leaders improve the status quo, so they make things better. That's why also the massive transformative purpose, but they also serve as a role model to others for their behavior. And I think it's not only what they do, but also how they do it, which is quite key. So in essence, when we look at leaders and leadership, what I'm actually seeing as the world is becoming less and less predictable, it makes less and less sense to actually work on skills and technical skills. Because all of these things are like the apps. You can very easily take an online course and you can upgrade your skills very easily. But what becomes more important is actually to work on your attitudes, your kind of beliefs, principles, values, and actually in some sense on your character. If everything else is crazily changing around you, the way you approach the world, the way you see the world, the way you make sense of the world around you, and your character is actually more important than the technical skills. And I think there is a big shift in the leadership development industry in that direction. So kind of going into the deeper attitudinal things, which are more about who we are being rather than what we are doing, right, as leaders. Of course, the apps are still important, but they can be fairly easily acquired. So I have actually identified 6 different elements of this underlying operating system. Mindset, basically, how do you make sense of the world? Empathy, how do you relate with yourself and others? And I think Tariq was speaking about the importance of trust and empathy, which I think is key, especially as technologies gives us more and more power. Without empathy, I think we won't get anywhere. Ethics is basically about how do we make the right decisions and actually how do we do what is right. So ethics are not about what do I think is right, but actually what do I do when I actually make decisions about how I spend my time, how I do things. So ethics needs to be brought back and discussed quite seriously. The underlying purpose, why I do what I do. Vitality, to sustain our energy. And I think we know a lot about that in the last 3 months because kind of our status quo in terms of our vitality and health has been disrupted. And the final one is what state am I in? How do I tap into what is called flow? Again, don't have time to speak about it today, but very interesting topic. So those 6 elements, I think, are things that on the attitudinal level, on the below the iceberg level, leaders need to work on today. And the final slide that I have is, this is maybe a dynamic because this is maybe like the kind of things that you aspire, you build. But in terms of on an everyday level, I see actually leaders who take responsibility over the future doing 3 things. They understand the reality and they strive to really kind of see things that nobody else can see, so understand it differently. They envision new reality and how reality can be different, and that's the kind of the positive transformation of status quo. And then they shape reality. So actually they translate the understanding, the new vision into tangible things that actually affect the world around us. Final slide, this is a quote from Peter Diamandis and Stephen Kotler, great recommended book, Future is Faster Than You Think. But I love this quote to kind of finish up. So there is little doubt that the decade to come, and sorry, I need to close my, just to see it. So there is little doubt that the decade to come will be filled with radical breakthroughs and world-changing surprises. Every major industry on our planet is about to be completely reimagined. For entrepreneurs, for innovators, for leaders, for anyone sufficiently nimble and adventurous, the opportunities will be incredible. It will be both a future that's faster than you think and arguably the greatest display of imagination rendered visible the world has yet seen. So according to some statistics, we are only 3 to 5% in the 4th industrial revolution. So definitely huge opportunities ahead. Thank you for your attention, and I'll hand over back to Paul and Tariq, and I'm happy to connect with anybody on LinkedIn.
Thank you.
Thank you
very much, Jaroslav.
Thank you, Jaroslav, indeed. And what you see is that Jaroslav opens, unlocks attributes that we were not thinking, that we were not connecting in the early days to leadership. but that somehow shows you that leadership of the future has a different mindset. And what we are doing in the work, and that Jaroslav and I specifically are doing over the last years, is helping organizations to get into that different mindset. And Salim always says, well, this is probably the most difficult nut to crack. But we think that we are on a good track to be able to do that. So Jaroslav, really thank you for that. And in addition, and in the financial world, I only would like to add that what we are seeing now and the big chaos that we are in at the moment with GDPs declining, etc., shows us that how vulnerable we are based on how we organized and set up our economies. That has to change. And that is one of the things that we hopefully can address in the short amount of time that we have during this masterclass. Tarek, over to you.
Thank you, Paul. So you just got a flavor of what Jaroslav is going to talk about. He is going to do a full masterclass for 1 hour next week, next Sunday, the 23rd. And that is going to be really important because he'll take these things and peel the onion and go forward to that. Now, he's got a couple of very interesting questions, and Paul also added a fundamental question there. So may I launch the poll here also? We're doing these polls just for you guys to really get into the thinking and actually start engaging with some of these principles. So the question one that Jaroslav has got there is, how ready is your leadership and people's mindset for the disruption facing your organization? Not ready at all. We've got somebody running at 100%, not ready at all. Partially ready, mostly ready, or fully ready. The second question that Jaroslav asked was, how ready is your organization's strategy and business model for the disruptions facing your organization? Again, not ready at all, partially, mostly, and so on. So please, folks, very simple questions, but they are really important because they set the benchmarks. You saw earlier on, 54% of the people are not ready, according to the survey that was done. Let's see what sort of numbers we get. The next question, which was contributed by Paul in support of Jaroslav's work, is what withholds your organizations to become an exponential organization? What is holding you back? What are the elements there? Is it an internal immune system? Is it regulatory issues that you think? Is it just resources? Is it the type of leadership and management that you have around? So those are the kinds of questions. And the final thing is, in our post-COVID roadmap, what does it look like? Getting back to basics, moving forward and evaluating what we can do different, developing new offerings, or it's really not clear what's going on. So these are the 4 questions. Any thoughts? Amol, you're a traditional banker, you see this. What kind of leadership and organizational challenges are you addressing on a day-to-day basis on the one side and the regulatory and business processes on the other? Where is that tension for you?
I think it all starts from the management, right? Someone who's leading the organization. I mean, I think, you know, if you get that one person right, I think then the entire organization is technically sailing in the right direction. And with CBD, what had happened is we've got a CEO who's a doctorate in artificial intelligence. So I mean, he understands technology at the back of his hand. So things are far more easier for us when we speak to him. You know, he knows technology, you know, very comfortably. He's been a treasurer himself, so he understands how markets behave. So I think it all boils down to somebody who's leading the organization and less of people who are actually running. What you typically need is the executioners, you know, who need to execute the strategy, right? It could be a 3-year strategy or a 5-year strategy. So with the regulation, I think things have been fairly well. Now, do you want to go to the poll results?
Yeah, I mean, you can complete your thought. I mean, the poll results are very much there, but how ready is your leadership and your people's mindset? So exactly what you were referring to, only partially ready. And less than 7% of the people feel is fully ready. These numbers are fairly representative. Firoz, is that your perception also? Not ready at all? I mean, partially ready to not ready at all, which is effectively 60, 70% of the
I
people.
mean, it's probably correct in the sense that, look, we got thrust into this world all of a sudden in the last few months. Those last few months were rather creative in terms of how we changed ourselves to survive and changed our behaviors to survive.
Yeah.
They are now becoming a part of our DNA. They're getting ingrained, right? So I think as you rightfully said, the acceleration was thrust upon us. If we did not have that catalyst, we would probably be doing the same old thing over and over again for several more years.
Yeah.
So I think the world has changed. I think to the better. It has also brought in the issue of technology and technology platforms to fore. I will give you, I mean, real life examples. I know banks who were ready with the teleconferencing and telepresence. I know banks who were not ready.
Yeah.
And the banks who were not ready, I mean, I know them by name, where they said that Microsoft Teams was only available to the 7 or 6 top executives in the company. That's it.
Wow.
Nobody has access to Microsoft Teams, right? Versus a company like mine, where we live and breathe Microsoft Teams from day one. We didn't even think about it, right?
An interesting data point, when JP Morgan, when this thing happened and JP Morgan had to accelerate the process, they accessed 117,000 employees went on Zoom. 107. In other words, even JP Morgan was not ready at all.
Yeah.
And that was the shift. The other thing,
Tarek.
the other dynamic, which maybe Yaroslav, you can also comment on, the other dynamic is that the weaker companies are going down, and all COVID did was accelerate the process. And the resilient ones and the anti-fragile ones are going to be fine. So it's like a forest fire, you know, the trees will fall, even big trees are going to fall. Would you agree with that? That you know, I know it sounds really brutal, but the fact that the weaker ones are really suffering, while the other ones are just sort of finding a way out.
Well, I mean, I think it's quite a complex, topic, because you have differences in industries. Some industries actually were boosted by the COVID situation. Some industries were, hardly impacted negatively. Brian Chesky, the CEO of Airbnb, which has been doing really well over the last 10 years, almost said that the pandemic has undone the last decade, and they were about to IPO and they couldn't, and everything. So it's even very innovative and open-minded organizations in some industries were very badly impacted. I also think what's definitely a factor, let's be clear about that, is what was the cash position when the pandemic hit, right? So some organizations were more cash resilient and they could actually afford kind of a different pace. But I would maybe, there is a book, a very interesting book that I would recommend. It's called Lead and Disrupt. And has been a study made over about 100 organizations, from which about half of them have actually been around for 100 years, and they have actually changed their business model several times. They actually pivoted their core business several times. And the other 50 were kind of like Kodaks and Nokia, so they kind of got disrupted. They didn't adapt in time. And they studied what was like all the different factors that actually played a role to be in one group or the other. And they actually determined it was the mindset of the leadership of those organizations. And essentially they were, one of the traits, it's called ambidexterity. It's kind of, traditionally you'll be able to draw and, and do something different with the left and right hand. But ambidexterity in leadership and business means that you have one eye on the current business and the current strategy, as you spoke about it as the core. But at the same time, you actively are looking into the future of the industry, into future businesses. And you need to today be able to do both. There is just no other way. You just can't get around, just maintaining your current business. And I think this is difficult because especially when the pandemic hits, it tends to be reactive. Even the top answer was, let's just get back to, get on our feet. But actually now is the biggest time to do something differently. And the other thing is happening that many people are starting now startups. So actually, if you think that you can just be what you were 6 months from now and the market will be the same, it will not. The market will look different than it looked before the pandemic because people are now designing new and new solutions. I think the only chance is to do both at the same time. It's a little bit harder, but it's what's needed.
Yeah, I do agree
Just final
with that.
point on this one. Sorry, Paul. What holds your organization back? And the one that we are looking at as 51%, we're talking a lot about things, about making decisions, but really not starting. They're really not, you just don't get going. It's all a lot of blah, blah, and not moving fast enough. 51% of people are actually saying that, which is quite an interesting statistic. I mean, do you guys find that at all? When you're going out there as consultants or as technology, Ali, what are your thoughts? You haven't spoken.
Yeah, I mean, I think it's a common theme, right? I think the reality is that no one's going to come out here and deny that artificial intelligence is not important, that blockchain is not important. It's not going to change the world. Everyone knows it. They just don't know how to get started, right? And if they do know how to get started, they sometimes lack the courage to get started in the first place. So whether that lack of courage comes from, should I be the first one in my organization to actually promote this and do this and take the risk against all my peers who are going traditional? Or is that lack of courage coming from the fact that, you have situations in which even if you have a leader who is ready to go embark in the journey, you don't have the execution capability because you don't have the people with the right skill set in order to actually execute this. You have to remember that the cloud model is a model that is fundamentally different to an on-prem model. And this is one that we see a lot in this region too. We have a lot of ambitious, forward-looking bankers, dare I say, that are very bullish towards the cloud model, but their IT departments are full of people who have built their careers on premise. They don't understand, and they're afraid. They think the cloud's going to come and take away their jobs, right?
Yeah.
And
which probably would, unless they retool themselves. Amal, you're laughing. I think that you can feel the pain and you can resonate with that.
I don't feel the pain at all. In fact, I was having a conversation this morning about why are we not on the cloud, right? I mean, but then again the point, again the point. We probably are on the cloud 9, but then we are not in the
not on the real cloud. Yeah.
So the point remains, and I think Ali had actually mentioned a very valid point. I would not talk more about the courage, but then it is, I think, the skill set. And every organization, it may not be a very new technology, but then yet people have not really learned. They've not improved their skills on it, and hence organizations have not looked at very seriously, although they may have subscribed to it. Although they may have gone out in the press and said, yes, we fully support it, but then skill set, is a major challenge out there.
Okay. Super. Thank you. Thank you very much. Let's end this segment. It was very useful, and it really got a lot of thoughts moving. Thank you, Yaroslav. Some amazing slides. Well done. Ali, over to you. Rapidly forward.
Thank you so much. So I'm just going to share my screen, and you guys let me know when you can see it. Just give me a nod, Tariq, and I'll get started.
Yep, we're good to go.
Yes. Welcome. So I started my career in Microsoft a couple of years ago, and my task was, Ali, go and talk to banks and tell them about the value of technology, tell them how technology can help enable their business. And I had my first board meeting, and the members of the board look very similar to the picture that you're seeing.
This looks like Trump's cabinet also, by the way.
Could be, could not be. I'm not gonna do any copyright infringement here. But what I will what I will say is in this board we had specialists in risk, specialists in compliance, specialists in regulation, specialists in banking, not one specialist in technology. In fact, when the words artificial intelligence came out of my mouth, there was a daze of confusion because people didn't understand. And that statistic holds true. Only 6% of current incumbent bank boards have a technologist on the board, at the board level. And that is one of the issues, because how can a CEO go ahead and say invest X in technology when my board won't support? At the end of the day, this board cares primarily about one very, very large metric, actually two: reputational risk and return on shareholder value. Those are the two things that the boards will care most about. How you get it, not really their problem, as long as you don't mess up the regulatory part, as far as a bank is concerned. So, one of the things that I always look at, and this is is an interesting fact, is if you look at the top companies today, and I'm using 2017 deliberately here, but the graph stays true even today. The top companies today are all tech companies, right? And you think to yourself, why? Why has a giant like General Electric gone from the top to a lower position? Why is Coca-Cola, one of perhaps the best business models in the world and still a very, very highly valued company, gone below the top 5 companies list from a market cap perspective? And The reason for that primarily is, again, the usage and adaptation of technology and the business model. What do I mean? Well, today, customers, the way they are thinking has fundamentally changed, right? And that is as a result of primarily all of the technological innovation that we've seen come out primarily in the retail sector. So customers know brands, right? I would like to ask my panel. So Tariq, what phone do you use? What's your
I
phone?
have a Samsung.
You have a Samsung. Amol, what phone do you use?
I don't want to say.
Come on, tell me what phone do you use. It's not a BlackBerry, I'm sure.
No, it's not. It's not BlackBerry.
Okay, fair enough. Yaroslav, what phone do you use?
I have an iPhone.
Paul,
2 iPhones.
iPhone as well. Feroz,
iPhone.
iPhone, exactly. I think I proved my point right here, right? Well, for example, Huawei has all the same features. Why doesn't anyone use Huawei? Okay, forget China for a second. I can name you 10 other phones that have the exact same features as the iPhone, perhaps even better, but customers know brands. Most of this call will probably be using the Samsung or the iPhone. I'm guilty of it too. I'm a Microsoft employee. I use an iPhone. But the interaction has also been hastened, right? And then that's a different element because customers want their things now. And depending on the bracket that you're in, this really makes a difference because again, as a young person, we are used to that, instant gratification. We make a payment, we want to see it go through. We don't want to wait in branches. When we want to talk to someone, we want to talk to someone via chat. We want our answers now. People don't like waiting anymore. And the purchase decision is also no longer linear. When you first thought of a purchase decision, right? Normally the process that you would go through is you would say, okay, I want to buy product X, whatever it may be. Let me do some research. Let me ask my friends and family. Then let me compare the features and benefits and go ahead and make a purchase decision. Today, 46% of millennial purchase decisions come off an ad they saw on Instagram. Doesn't matter if their family members use the product. It doesn't matter if they've ever seen the product before. If it's a hit on Instagram, people are going to generally purchase it. And that's a different mindset. And that's a different mindset for banks as well, because the way banks are selling products today is still a linear purchase decision model. And you're slowly seeing that change in the retail space. And finally, customers expect a real-time interaction. They want everything on a real-time basis, right? And they want to get that human touch of it as well. I think all of us can relate that time when we called the bank's call center and we got an IVR, right? But there are mechanisms and technology today that can take the tone of your voice. And when you say something like, I want to speak to the manager now, a robot's not going to answer you. It's going to direct you to a human because it understands how, from your tone of voice, how annoyed you are on a scale of 1 to 10. And probably you don't want an answer from a robot. So being able to make that distinction. So the purpose of telling you all of this is in this traditional mindset, and every bank has this. Every bank has a back office, a middle office, and a front office, right? But in this traditional mindset, the back office was the product. What product do I create? The middle office was all about processing the transaction, processing the quality of the transaction, right? And the front office was usually a relationship, right? Your relationship manager, your front end, RM, etc. And that model is fundamentally changing now. So back, in my first ever banking conference, I had the pleasure to be around a lot of my seniors who were speaking to this one fine gentleman who made a statement that I want to connect people who have money with people who want money. And all the bankers in that room said, you are absolutely batshit crazy. This is never going to work. This was back in 2004, right? This gentleman went around and built something called Zopa. Zopa is the largest peer-to-peer lender in the UK. And it's exactly that model, that he connects people who want money with people who have money through a channel, right? And fundamentally, from a technology point of view, that's changing what the back office does, the middle office does, and the front office does. So today, from a technology point of view, if you really, and Tariq, you touched on this, you said anyone can become a bank, right? You said that the fundamental building blocks of a bank are technically available to everyone. And I just wanted to double click on that a little bit and see why. What are those fundamental building blocks? Well, those fundamental building blocks come down to three very, very simple high-level technologies, right? The back office, which is all about analytics, right? But here's the challenge. Today, banks' data are in silos. So how do you run analytics on 5 portions of a pie? You need to have all the data in one pie before you can run analytics on it, right? But everyone knows that analytics is important. They understand that when they have analytics, they can move forward in that journey. The middle office is all about APIs, connecting certain back office applications with the front office, right? And the front office is all about applications, right? And this is where Amol and yourself mentioned fintech partnerships, right? Fintech partnerships are your applications. Fintechs have done the work for you. They've built some very, very good apps. In certain cases, they've even built some very, very good APIs. But if you get these three things right as a bank from a technologist point of view, and by the way, all three of these technologies are not new. They're not, revolutionary. They are all available today. Everything is on the back of, growing what these three building blocks already offer to you today. But if you can get these three portions right, you have the foundations to build a really, really compelling value proposition. And I'll show you a few examples. So on the application side, there were two friends, Iqbal and Andrew, and one of them forgot his wallet. This was the foundations to Venmo. And everyone understands where Venmo is today and the current volumes that Venmo process. But Venmo is not a odd one out. There are tons of payment platforms across the world that do the exact same thing. The basic model of it is, I don't need to actually pay you in cash. I can transfer money, and it can be just as easy. If you look at the middle office, there are two brothers that turned up, Patrick and John, and they turned that 7 lines of code into a $9.2 billion startup, right? That startup, Stripe, powers most of the e-commerce in Europe today. And effectively, it is actually the underlying e-commerce engine to Amazon.com. So you can see how this 7 lines of code as an API basically just connected the back office with the front office and allowed them to make tons of money and made the customers' lives infinitely easier. Today, Amazon accepts 12 different payment mechanisms, and they all go through Stripe's platform. But the two areas that we're seeing the biggest change coming in, and this is what's changing the banking space as we see it, is artificial intelligence and automation. And this is the part where I mentioned that people are a little bit afraid that automation might take over their jobs, and a fair bit of it is real. In 2005, I had the pleasure to visit a UBS trading floor. It looked like this, right? Full of people, very loud, lots of commotion, phone lines, hard lines. This was UBS's trading floor. What did this trading floor look like 2 years ago? So the robots took over, right? And it allowed UBS to shrink its trading floor by a significant percentage, right? The question that we asked UBS in our partnership with them is, what did you do with all these people? Did you actually fire all of these people? And the answer was no. They did, yes, a portion of them were let go. This is true. But a vast majority of them were retrained towards other purposes. And this is the double-edged sword of technology. Combined with the right cultural elements, as Yaroslav mentioned in his speech beforehand, the use of technology can be a very, very powerful tool to propel the bank forward. It can take people who do not have the skill set or have a skill set that's no longer applicable and train them to actually perform in a better way. And that comes primarily from leadership, but it also comes from having the right foundations in place in terms of what we're doing from an organizational and cultural capacity, right? Most of the leading technology vendors in the world today, whether it's us as Microsoft or our competitors at Google or AWS or SAP, all have training programs readily available for our customers. In fact, I have customers today that are leveraging some of these training programs just to upskill their staff. But the double-edged sword of technology is that it empowers and it can be used as a further empowerment if used correctly. And it has a bottom line value. I attended a conference with Lee Wan, who is the EMEA head of Ant Financial, and Ashok Vaswani, who is the head of Barclays UK. Lee Wan said in this speech, he said, each employee of Alibaba generates about $16 million a year. And Ashok Vaswani was silent. He looked at it and he was silent. So I did a little bit of editing on this picture here, but he didn't say anything. But I thought I could guess what he was thinking. What he was thinking was, wow, our employees generate less than $400,000 a year because we have so many of them, right? Whereas Ant Financial and Alipay don't have as many employees. So therefore, the revenue per employee is significantly greater and they're doing much more business. And there are banks that have taken this route. There are banks that have definitely gone on this arena. So as early as 2017, BBVA revealed that almost 90% of their products are now do-it-yourself digital services across the group. So customers can pick and choose the product that suits them, and they can initiate a transaction across any channel. And that in 2017, by the way, this number is now 72% today, 43% we're seeing an increase in digital sales, and now in total you have almost 42% of transactions of BBVA are coming from digital channels. So they're really seeing, and Tariq, this was I believe one of the points that you touched on in terms of your future of finance 5.0, that most of the interactions will become digital, and this is what we're seeing specifically in the retail, and also largely growing in the corporate, but the corporate has a little bit more challenges, which I'm sure Amul will touch on at a later time today. The other thing is, if you look at some of the examples of existing banks in terms of what they're doing with their people, you can see a vast change, right? So in JP Morgan today, you have 40,000 employees that are technologists, of which 18,000 are purebred developers, right? Why is a bank hiring so many developers? And that also goes to a point that you mentioned, Tariq, which was, the hiring schemes of banks is fundamentally changing. And so is the investment budget. Today, JP Morgan spends $9 billion in technology, right? That is a massive amount. That is 1/3 of their overall investment that they're spending on it. And we're seeing across the board changes in spending on cybersecurity, on cloud. And this is where the future is really going. And these are, dare I say, some very large, archaic, relatively old financial institutions that have got legacy and, decades worth of history, making such kind of radical changes. So the question that comes up is, why would a smaller or more nimble bank or more local bank be afraid? What is the loss? Why are they hesitant? And what can we do collectively in order to support banks on this journey? Because as I mentioned earlier, everyone knows technology is a fundamental and important aspect to this. It's just the question of how. How are we going to get to that point? So everyone likes using the example of Ant Financial, right? I've seen Ant Financial come up 4 times in today's presentation and various talks. So we all know Ant Financial, 2 billion customers, 100 billion transactions per day, 1 million transactions per second. By the way, Visa does something around 20,000 transactions per second, and it's maximum, so massively higher. But the less known fact about Ant Financial today is Ant Financial is on their 5th generation of systems refresh, which means they change their systems every 3 to 4 years, right? And we've worked with Ant Financial in a partnership capacity. We've learned from Ant Financial when it comes to helping some of our other customers through technology, specifically in China. And what we figured out is, Ant Financial literally has a department that sole purpose is to think, how am I going to rip out everything I have today and rebuild it from scratch all over again, right? I ask the question, what is the reaction of a banker when I go to a banker and say, hey guys, what are you thinking about replacing your core banking platform? The looks you will see across various C-suites when you say core banking replacement is a testament to how banks think about this. It is almost a look of fear. And if it's not a look of fear, it's, why do we need to replace it? Can't we not augment it? It's so much work. What are we going to do? How are we going to keep our systems alive? How are we going to service customers? And all these questions come up that make this transaction or this proposition very daunting. And I think, maybe dare I say it, Feroz will potentially add to this as a lead consultant in the arena, where changing a bank's core banking platform is potentially one of the most integral parts that they can do, because it's like replacing the heart of the bank, but it's also one of the hardest, right? Most banks in the UAE today have core banking systems that are at minimum 10 years old, if not older, right?
Can you wrap up, please, Ali, because you're running about 10 minutes over. You're eating into your, yes.
Okay, sure enough, no worries. I'm towards the end here. So that is one of the fundamental thoughts that you need to consider. And the way to think about that is, and this is how we look at it, is many banks look at to us as technologists and say, give me the latest use cases on artificial intelligence, give me the latest use case on blockchain, give me the latest use case of RPA. And it's not about one set of technology on its own. It's about what we call the convergence of transformative technology. What can you do to leverage the best parts of all of these technologies in order to help you grow? And each of these technologies have its pros and cons, no doubt about it, but collectively they can help you improve. And this is where we and all of our colleagues in the ecosystem like to take banks from traditional banks, which just give credits and payments and loans and deposits, to the next step, the next iteration, which is an immersive bank that looks at customer experiences, to finally an intelligent bank that can predict what the customer needs and is there with the right tools and with the right capabilities and skill set to service the customers, leveraging the best of breed of technology. That's our purpose, and I think that's the direction where this industry is heading. Thank you so much, guys.
That's an awesome last slide. So we let you talk because you just, covering so many interesting areas. Can you stop sharing? So thank you for that, Ali. So we're going to change the flow a little bit because you're running about 10 minutes over. You spoke too much, but I'm glad you did. There's lots of interesting things. Now, we'll just do a quick poll and skip the Q&A and go straight to Feroz so that we can do the Q&A at the end together. So the polls, sorry. So let me, Ali's poll. Okay, let me launch the polling for Ali, and it talks about which of the following topics do you expect to dominate the financial industry for the next 6 to 12 months? Income and growth, cost reduction, and risk and compliance regulation. The second question is, which transformation technology do you think will have the most impact for banks within the next 6 to 12 months? And so those are the two questions that Ali has, and be interesting to see where things are going. Amal, Feroz, since you are very close to what Ali has been talking about, any quick remarks while people are voting?
No, I think Ali was spot on. And in fact, I was going to talk about something else, but then I realized that maybe I should add some value by sharing some thoughts on what Ali just talked about.
Right.
Where you see, established companies generally are not taught to think like a startup, right? We don't. If you go to a board and say, I'm running an established company, established product, established processes, they generate revenue, and you go to them and say, I want to think like a startup, they'll say, you're fired. No point, right? Because they're not built as a startup. If you really want to do a startup, you need to build a parallel company next to you. That's a startup, right? Because that's the only way. You have to really create your own shadow. And that shadow, unfortunately, dances in a different way than the real company that you run. And that's the only way I think culture change actually can happen, because in my opinion, going and selling a bank to replace a core banking system is a futile endeavor. I think we should go to the CEOs and say, hey, set up a parallel bank, give it a brand new core banking system, and run like hell. And guess what? Make your own bank obsolete while you're doing it.
Yeah.
Much easier stuff.
I ask you the question, and that is, some of the largest companies today are thinking like startups in many ways, right? Yeah. And what would be your consultant's point of view as to why some have managed to get that right? Is it the business model and just banks can't do it? Or because to be honest with you, Amazon's done it, Apple's done it, I would argue Microsoft's done it.
Well, Microsoft has done it.
Why can't bank do
it? There is one underlying problem, Ali, which is called regulation, right? Banking is a highly regulated industry, and the regulators generally are very conservative in their nature, right? So while we may like it or not, most of the banking industry refers back to the regulatory frameworks that they live around. And so most of the banks are looking for leadership from the central banks to create models and processes to be able to have them conform to. Nobody wants to go take a leap like Ant Financial or others and say, I'm going to go break the system, because there are consequences to breaking that system. It's somebody else's money you're playing with, right? So in many ways, it's that balance you have to strike. It can't just be a unilateral one-way street. Now, what you talked about, like Stripe, like Venmo, and like other, they are adjacencies in the overall core. They're not the core, right? They're truly adjacencies that are basically user interfaces that were disrupted or frictions that were removed. But Venmo didn't start a bank, right? Stripe didn't start a bank. So you have to think of that perspective and force the regulators to start thinking more creatively.
Yeah, I think we'll be talking a lot about regulators towards the end, especially after Amal's session. The three people here, Jaroslav, Paul, and I, we constantly talk about something which is core and edge. that your core business is like an aircraft carrier and the edge projects are on top. And basically, that is the, I mean, Marriott Hotel is a $40 billion company before COVID. And it had opportunities to take over Airbnb, buy similar products to Booking.com and TripAdvisor, and they refused. But if you collect today, if you put all of them together, they're a $171 billion pie, the whole cake. So they lost 400% in terms of value creation just because they said we couldn't go into the adjacencies. Even though they were not hotels by definition, they were other applications and stuff. So,
yeah, but Tariq, if Marriott bought Airbnb, Airbnb would have been a dead company. If Marriott
indeed.
bought, right?
Yes, absolutely. But it wasn't so much the buy as an acquisition buy, but in other words, invest in and let it run by itself, or build something and have the courage that the adjacent company can be bigger than yours, it can come and kill you. So when we go out, Paul and I, when we go out, we always recommend to create a company right next to your institution that has the ability to attack and eat the company in 3, 4, 5 years time, because somebody else will do it anyway.
Yeah.
So that's one of the things. Cool. Thank you, Ali. You created a lot of conversation. Feroz, may I go to you, please?
Nice.
And over to you.
Well, look, I don't have a presentation. I have a few words, and I think it's more about a conversation. So, as I was saying earlier, I look at customers as a focal point and figure out what revolves around the customers, and who owns those customers and how do you service those customers, right? So if you look at today, banking is nearly like going to a dentist, right? You got to do it, but you hate it, right? Nobody likes to go there. And the reason for that is not because banking is inherently bad, but it's just an old institution that has just existed, and it's a part of your fabric, right? You have to be a part of that fabric. Now, if somebody turns around and says, I'm going to make a bank that you love to go to, I'd say, forget about it. Banks are never going to be lovable organisms, right? I think what will happen is, if you look at it from the customer centricity point of view, you can make life a little bit better for the customer, more pleasant for the customer. And that's the adjacency I'm talking about. Who has done that more and more? The way you look at it is retail. Retail is an environment which generally is about, you walk in, you take a look at your things, you touch and feel, you purchase something, you wonder, you experience, right? And that generally has been the fabric of how malls have been built and all these shopping destinations have been built. It's called destination management, right? Now, if banks start thinking about retail and saying, okay, how do I service the customer? Or if the retailer starts thinking about how do I service the customer to be, in banking space, things start changing. And that's what's happening. Retailers are more and more saying, if I have to control the journey from end to end, I'm going to also control that portion of a journey where payments happen, which touch the bank, right? And if I can make that life a little bit easier, right, and more seamless, and maybe perhaps even touchless, that then enables me to get my little commission or my little, angle towards becoming a bank, right? What are loyalty cards? Some sort of stored value. Well, if you translate that stored value into cash, or if you start burning those loyalty points almost across the entire fabric, you automatically have created value, right? So now you've started encroaching into quote stored value, which, what is a stored value? It's your personal account in some ways, right? So these are the kind of thinking that is happening in the retail front. Telcos are thinking the same way. They own the customer. They own the customer experience, right? They have you top up your minutes and time into the telco. Well, what is top up? Top up is nothing but stored value. Move that across to banking. Why can't they start a stored value personal account? Why can't they start selling you insurance services, wealth management services? I'm focusing purely on retail side. Amol will talk a little bit about the corporate side, right? So all of this is happening, and all these adjacencies are now starting to encroach into that space in a good way, because they're now looking at customer centricity as the way forward. How is that happening? Well, it's happening because of open banking. A lot of the regulations are now allowing banks to throw out data that can be captured by others, by law, which then can be morphed into value-added services for them. So that change has accelerated. Now, again, let me not say it's easy. It's hard, and it's hard because you need the solid infrastructure below you to be able to make it happen. And that's where Ali came in. Ali said, look, without that platform that exists, without those data lakes, without that whole data concept of how data goes, where it goes, how it's governed, how it's secured, nothing can happen. Because ultimately it's that data play that makes artificial intelligence happen, robo-advisory happen, and future-proofing in terms of predictive analytics happen. All that happens through this data layer. So as I said to you earlier, a lot of it hinges on the regulatory side of things, in banking at least. We need to go and spend a lot of time with regulators to have them start thinking about these kind of constructs that are coming in. How can you make life easier for the customer and by using technology? And how can technology be used for the good with the right security and with the right boundaries around it, right? Privacy included. So that's what's happening in my space. I spend a bit of time doing that. And I do spend a lot of time with the non-banking world, trying to make them into more banking-like in terms of their ability to be able to help consumers take that journey, which is rather seamless. Let me give you a very simple example. You start a session on your mobile phone, go to any bank, start a session and say, okay, I want to do some transaction. And you're walking towards the bank and you see the bank in there and you walk in. Does anybody know what you were doing on your mobile phone? Nobody does. Nobody has a clue. Why should they not? Why should they not know through proximity that you're there, you're a customer, you're their customer, and you can seamlessly move them from an online to an offline presence, help them close that transaction, whatever they were doing, sending money for their kid's school fee or paying for a new car or borrowing some money, who cares, right? It can happen because technology can allow it to happen. We just don't think like that. We don't think of the seamless journeys. We always think of broken journeys along the way, right? And so now with the mobile phone in your hand, which moves with you everywhere, right? Why doesn't the bank start thinking like an Uber? Why doesn't the bank start thinking like as a service model, right? And that's something that we need to challenge all of them to start thinking about, right? To start figuring out a way to seamlessly stitch that experience for a customer, which doesn't exist today. It's all broken journeys. It's not my department, it's some other department. So when you want to send money, it's a different department. When you want to withdraw money from an ATM, it's a different department. When you want to, and of course, we live in a world where checkbooks are happening. I mean, what is a checkbook, right? So this is the kind of mentality we are fighting now. Talking about disruption, and this is about what Yaroslav said earlier, which is, look, there are underlying behaviors that are more institutional. Then there is the personal behaviors which are more ingrained within us, as our emotions, etc. Right? The one thing that I say is that most of the fights that I have, and these are good fights, never happen at the institutional level. Because the institutions are generally made to be non-conforming and very much focused on their objectives driven by the board, which means conservative, straightforward, cash flow generating. Startups inherently are nimble, bleeding, money out the pocket, at least until you turn that corner and start making money. Now imagine these two worlds. They're totally different worlds, right? The board will never allow you to go there, and the startup board will never want you to live in the board of the other, right? So you have to start building that bridge. And as I said earlier, the only way to build a bridge is to have companies build their shadows, right? And their shadows are much larger than them, right? Much, much larger. And that shadow is what you need to create as a leader to be able to build and say, okay, I'm going to build this. I'm going to take a risk. It's going to be controlled risk. It's not going to be huge. Let's see where it goes, right? And you get an allocation in that space, but you don't disrupt your mothership. You don't disrupt your aircraft carrier, right? Let the aircraft carrier keep going the way it goes, right? Have your little U-boats on the side going out into adjacencies and figuring out how to bring those thinking back. So that's where I spent a lot of my time, Tariq. I'm going to stop now. I think the better area to talk about is Q&A. I think maybe Amol can talk a little bit about the more non-retail side of the business, and then we can round up with questions.
I think, Amol, let's go into your presentation straight away. Take about 5-7 minutes, and then we'll do a Q&A after that.
Yeah, is it visible?
It's visible, but it's not in presentation mode. It's in.
Okay, let me.
Fine. Keep going. It's okay. We can see it.
Yeah. Does this make sense?
Yep, absolutely perfect.
Okay, great. So I think it's already been discussed on, predominantly on the retail side, but then still, I think I just want to touch base on. There's been a discussion around the digital banking and all of it, and as digital digitization of the banking gathers momentum across the globe, and we've been seeing a lot of several digital banks, or how you call them, a neo banks or a challenger banks. These terms have been popping up for some time now, and unfortunately, or fortunately for that matter, we are hearing these terms in the Middle East as well, where a few of the banks are claiming to be sort of a digital bank here. But then, having said that, my area of expertise, or topic where I actually want to talk about is more on the wholesale side of it. But before we go there, just want to take you through a slide, sort of a difference, although Ali and Firoz has actually covered, but then there are two types of departments within the organization. You have retail, which looks after the individuals and the sort of the needs and everything about an individual, while on the wholesale side it talks about the companies, where you've got the SMEs and the corporates and the government looking at it. Now, speaking of which, as you can see, the slide is fairly simple to understand, but I don't want to spend too much time. But as it is evident, you see, majority of the work has been done on the retail side, and there's hardly much work on the wholesale side. It could be primarily because wholesale banking gets a bit of complex, as the risk which are involved are much higher. They are not an individual issues. These are organizations issue. Hence, they must be dealt differently. This is not that you're issuing a credit card to an individual, or getting an opening of an account digitally. These are large organizations we are talking about. So hence, they are looked at slightly differently. But over past, I would say, a few years now, they've, at least on the transaction banking space, we've seen kind of investment flowing through, where at least the management have started looking at this one particular area, where they feel the stickiness with the customer can stick around for a much longer time, and hence the investment. It is not just about the money, what you're making out of this particular department, but this is keeping the customer for much longer tenor. As Firoz mentioned that, he said, who loves a bank, or why would anybody want to go to a bank when you don't need to go to a bank, but you need a banking, isn't it? If a corporate wants to make a payment, he just wants to make a payment. He doesn't care which bank he's making payment from. So what a treasurer or a CFO would typically look at is the convenience factor, and of course the cost factor. So if these two pieces are taken care, I think you have a successful wholesale bank, and a transaction bank for that matter. Now, before we talk about what actually takes for a wholesale bank to become a digital, I think these are 4 important questions which I expect senior management, or CEOs of the bank, or board members of any financial institution to actually answer. Number one, if they have a mobile first distribution model, or if they're looking at having a mobile first distribution model. But remember, I'm here talking talking about on the wholesale side and not on the retail side. For a retail, it is much easier. But would you, as an organization, would Firoz's organization, or Tariq, your organization, or for example, Ali's organization, would Microsoft open their bank accounts with a financial institution on a mobile? Would they do it? So are they really keen in it? What is that you actually can do about it? But from a bank perspective, if you have a capability and if you are inclined towards building a capability, then yes, you should look at creating a wholesale digital bank. Is a bank ready to get rid of their front end and back end office manual processes? Now, when we talk about the manual processes, we typically talk about the back office. We don't really think about what RMs are going through, right? Opening of an account is a manual process. Getting a financial statement and the balance sheet from a customer is a manual process. So these are all the manual processes at a front end, which are equally time consuming, which are equally very, very manual intensive, and not just the back office. Does a bank have a are they committed to a cloud technology? I mean, Ali touched upon it, and I think it is a pretty valid point that while banks have subscribed to it, but why are they not courageous to look at this particular technology? Why can't they host all their applications out there? And finally, probably not in the sequence, but then does the bank have a default digital culture? When they think of a solution, they should start from a digital side of it rather than, hey, there can be a manual processes and, probably a stopgap. Let's start with manual, and then over a period of time, let's build in, onto the digital. But if you have a default digital culture, you set out in the organization itself, and this has to be top down, right? It can never be a bottom up. It has to be a top down, board members, the CEOs, the executive committee, all of them needs to have that culture built into their DNA. Only then, and if the answer to all these 4 questions are yes, then yes, I think you can look at building a wholesale digital bank. Now, finally, I mean, these are the 4 key areas where I seriously look at where any bank who is looking at building a digital bank, a wholesale digital bank, and of course, we all know that the stakes are much high for the commercial bank, but then having said that, I think in the medium term, I feel that these new digital platforms and channels are expected to grow, and they typically contribute to the overall 30, 40, 50% of the overall revenue. A bank of our size, we would contribute, and if I'm talking about a wholesale, I'm talking about SMEs, a corporate, and the government institution contributes to a very large extent. I mean, I would say the upwards of 70 to 80% of the overall revenue. We are a wholesale, a hardcore wholesale bank. And then, I mean, if you look at, let's say, ADCBs or ENBDs of the world, at least a 30% of, or 30 to 35%, if not 40, would actually come from a wholesale bank, because they have a large retail bank franchise as well. But then when you look at a wholesale bank, it's a massive portfolio. The revenues are pretty large because the stakes are large. You're talking to a large corporate, hence the seriousness gets very, very you need to look at things very seriously. Now these are the 4 points which I would talk about. Mobility and CRM, they are not necessarily in the same sequence, but then now when you're talking about a CRM, how many of the relationship managers are actually having the access to their customer data on the fly? We have it on our mobiles. So we just have an app, we log in, we are on the on the move, we are talking to the customers. We can have the entire 360-degree view of a customer on our mobile app. We don't need to go to our desktops, open up a computer and look at the data. So I think this is where it needs to start off. The second piece is the credit and documentation. Now, all the financial information, it could be, I mean, it can start from the SME as well, isn't it? I mean, if a large corporate house is not interested in feeding the data onto a platform which you're offering them, because you don't want your a credit team to key in the same information again, but you can start off with the SME. And that's what I think Starling Bank from UK had actually, at least, made an attempt to, set up at least an SME digital bank. All the credit reviews and everything are, available today. Firoz and Ali would, have also touched upon it. These data are, I mean, the decision making is far more easier because you're at least the first level of information or the analysis can be done by the machine itself. Looking at different ratios, looking at the cash flows, looking at different kind of cash conversion cycle. All of that information is already available, through different application, and all of that thing can be digitized.
Amol, can you please wrap up so that we can get into the final session, please? Thanks.
Absolutely. And two last points about the billing and pricing engine. Fees are very granular for any large corporate bank or a wholesale bank. Now these digital banks, typically, when we are talking about retail banks, because they don't offer fees, things get much more easier for them. But then on the wholesale side, you've got trade finance, you've got treasury, you've got cash management, and there are there are plethora of fees, and they get very granular, and hence capturing of that information is very, very important. And finally, the transaction banking, that's where I come in from, and that's where the whole lot of investment is going on. Talk about the corporate online platform, all the collections and payments and trade finance, supply chain finance, all of it. So these are, I think these are the four key areas where I feel the banks needs to invest for it to become a digital bank. Thank you very much.
Great, thank you very much. Thank you. This is hardcore stuff, and I think what we need to do is, let's do a quick poll, get people's brains moving again. By the way, we've got people from all over the world. We have a very strong representation from Africa. We work very closely with Stanbic Bank there. There are many people represented from there, from Turkey, from Pakistan, from India, and across the region. So we have a nice cross section. So it'll be very interesting to work with them. Now, let's do a quick poll and relaunch. Sorry. Let me just get to your poll. And yeah, there you go. So 3 quick questions. What are the major challenges for the banks in the future? And I will launch the polling now and get people involved in it. What are the major challenges for the banks in the future? What would the margins for the banks remain the same as before? And is my bank digital by default? So these are the 3 questions that Amol has put forward. And the idea here is really to get you tuned in with the whole thought processes that he was talking about and get in the game. By the way, folks, we are in the final lap on this whole session. We are about 7 minutes over, so we're not that far behind. So we've got about 18-20 minutes worth of Q&A left. So please, could you put your questions in the Q&A segment on your webinar sort of interface, not in the chat session, because chat, it becomes very complex and difficult for me to whiz through. But I think it would be very useful if you could put it there. And then we'll start opening up the questions. And now we'll cross-fertilize with your questions, and all of the panelists can even ask each other a question. So Amol's, let me just end the polling. I think a few more are coming in at the last minute, but I think the basics have been established. Ending the polling. What major challenges for the banks in the future? Growing competition. Interesting. Would the margins for the banks remain the same as before? No. So they feel the margins will change fundamentally. My bank is digital, only 50-50, which is very interesting. 50% people think that the banks are digital. I'm shocked. I thought it would be less than that, but that's my perception. So I'll share the results. This is for everybody to see. Now, the idea for this polling is, 1, to get you thinking with us. 2, is all of these polls will be recorded. 3, we'll create individual posts, and if there are interesting stories that are coming out of the polls from the people across the board, They'll be shared on social media, on LinkedIn and stuff like that. And what we'll do is we'll take excerpts of the person who did that session and maybe do a 1 or 2 minute intro from that person with the poll itself. So these are active, and this is part of the approach that we have as far as this program is concerned. It's not a one-way presentation. It will be interactive. We'll get involved in a lot of discussion, use case studies, and the whole lot. So this is what a flavor of the program is. This is as you can see, it's quite deep. Now today we had 4 speakers. Normally we would have 2, so we'd have a deeper dive, and then they would be able to go much more granular in terms of what they're covering. And the last 30 minutes we will open up to some international CEOs and so on in a media style panel discussion, much more fast moving and so on. So this is what we are going to do starting next week, 4 episodes of deep dive. Please join us, subscribe, come and join us, because we're trying our absolute best to make this thing work, and we just need for you guys to just come in and subscribe with us. It's cool. So it's not. Why don't I just open it up? Would anybody like to ask each other a question while we're waiting for the questions to come in? Any burning question you want to ask each other?
I wanted some views from Firoz on the wholesale side. Firoz.
Yeah, so Amol, interestingly enough, I know 2 banks that are being built in the region, one in Abu Dhabi, one in Dubai, mostly focusing on SME banking.
Yes.
And what we know for a fact is that money is in SME banking. It's not in retail banking. Right? Retail banking is highly transactional in nature, very low margins, high competition, versus SME banking or trade banking are many bilateral relationships that you already have, and hence to nurture them in a digital format is much stickier and much more profitable. So that's happening. Question has been, how do you treat a digital bank? And the central bank, unfortunately, has been rather draconian, and the capital adequacy for a digital bank is far higher than what it would be for a bricks and mortar bank, which should be the other way around, shouldn't it? Right? And the reason is very simple. I think there's a little bit of a reluctance on not understanding. Well, maybe there's a fear that in the flick of a switch, a digital bank can disappear, right? And it could be gone with your money and everything else along with it. Versus a bricks and mortar bank, you could at least stand in line outside and shake the door, right? And I think this is a little bit of a misnomer in real life, right? This is a psychological world we live in, right? If a bank goes under, no amount of standing in line is going to help you, right? Just as a digital bank turning off a switch wouldn't help you, right? Yep. So I think these are the kind of things we need to think about. So I think the reality of it is that time will tell, but as these banks become reality, at least in the UAE that I know of, we will know how. And by the way, these are completely branchless banks, right? They will never have a branch. They will never have a presence. They won't have any relationship managers. They would have nothing, right? It'll be all done through programmatic views on underwriting and programmatic views on data collection and behavior management, right? So quite advanced. So it's going to be very interesting.
Cool. I have some other questions here. Abdullah Zaruni, he said that he wants to understand a little bit of the history of what is 1, 2, 3, and 4. Banking 1.0 started in Italy, the Medicis, and this is the 1472.
Tarek, can I interrupt? Because yes. I already answered that question, but okay. We can now focus on the entire audience. Okay. Just in a couple of words for this, and then we can move on to the next question.
All right. Super. Okay, those are, I mean, Mr. Abdullah is asking some very, very specific questions. Okay, so Mr. Rajagopal said, as part of a female, sorry, Shambhavi, as a part of a female entrepreneur groups, I want to know, when will banks actually give us microfinance and easier payment collection options? Licenses are cheaper, now encouraging solopreneurs, but the banks still want big deposit and it doesn't help business. And you spoke about SMEs, Firoz. You and perhaps Amol can respond. You guys don't want to help SMEs, do you? Um, and any SME that has 3 years of audited accounts and cash in the bank and profitable for the last 5 years doesn't need you. So you basically give them an umbrella when it's not raining.
Hold. Let me defend the banks a little bit. Let me defend the banks.
Thank you very much.
I'm not a banker, but I'll defend the banks a little bit. Look, the reality of it is the reason people want history is because there is something called bankable companies, and there are certain things that are non-bankable, right? Now, take credit away from it completely. Credit is risk, right? That's all it is at the end of the day. So if, you can get risk capital from anywhere. Your parents can give it to you, your uncle can give it to you, a bank can give it to you, a non-banking financial institution can give it to you. That's credit. But banking services generally happen with SMEs who have some sort of a history and some sort of a longevity, because ultimately a bank has a P&L to manage. They need to make some money from the SME, right? So as Amol, you'll share with us is that, you're a corporate bank. You're not going to go after substandard companies and create unnecessary risk. And what is the largest risk in this region? Flight risk, right? People run away, right? And so you don't want to take that risk. So to the defense, I think the banks try their best. Now, for the lady who asked about microfinance, absolutely, there's something called financial inclusion, where we talk about a lot of these things. And in financial inclusion, we talk about how, generally speaking, you need to use behavioral toggles to decipher underwriting, which is whether a person is a good borrower or a bad borrower, right? And you have to have some hooks around that. And generally, the way we've done it is with telcos, right? So you have a phone number, right? You go and borrow something from me. Tomorrow you don't pay, I shut you down.
Correct.
Right? That brings the fear of God to you, and you run back and pay me, right? That's how it happens, right? So you have to have some underlying basis around it. Right?
Yeah, I know, but I'll push back as far as the banks are concerned. This country is using post-dated checks or open checks, signed checks, as a credit security. And you go to jail if you don't pay. So effectively, the police is doing the banker's job in terms of risk management, because the only real stick that you have.
No, the police is doing the police's job. They're not doing the banker's job, and the reason for that is very simple. You tell me a good way to figure out flight risk, and then we can abolish checks. Just fine. Just tell me.
Is it only for flight risk?
Practically only for that.
I beg.
Because now we have bankruptcy. No, but now we have bankruptcy in this country. You can go and you have proper bankruptcy. You have companies law that has been established, etc. That's not the issue. The issue is that people, Tariq, at the end of the day, do run away, right? And these are not small companies. I'm talking about Pacific Controls, where people have run away.
Yeah.
I'm talking about NMC, where people have run away. I'm talking about Finabler, where people have run away. I mean, these are billion-dollar companies. If they're running away, what good is a small little SME going to do in this picture?
All right.
He's going to get a plane faster than you think.
All right. Let me.
And by the way, sorry to say this, but I mean, the audience is probably much broader than UAE. I was just focusing on the UAE. Let's not talk about the broader audience. I mean, I'm sure people in India, Pakistan, and other places have different challenges. And out there, I don't think flight risk is a big issue. I think out there, it's more about figuring out how to underwrite these loans.
Right. We have a question from Ruby from Stanbic Bank in Nigeria. She said, one of the panelists likened banking, Feroz, it's you again, to going to the dentist. What would help to improve the experience for customers besides just digital, embedding banking into social or some other thing like that? The two bankers or even you as a technologist, Ali? What would make me love my bank's products rather than going to a dentist?
I mean, if I can chime in here, I think, I was surprised when we had a 50% result saying my bank is digital. Having a mobile app is not being digital.
It's not digital.
Correct.
I think this is the misconception, right? I have a mobile app, I'm digital. Is not because the mobile app just touches the surface. And there's tons of examples. I mean, even in the UAE, alleged digital banks have been launched by very, very large incumbents saying we've launched a fully digital SME bank. It's a mobile application onboarding exercise that doesn't work 50% of the time. So to be a little bit controversial here, you know, I think the adoption to digital and the analogy to going to the dentist is not so much as you know, pulling teeth, as much as it is the overall experience. You want to come out having felt like this was painless and my teeth are whitened. You know, you want to come out with a new smile, to use your analogy, right? And the way to do that is to redefine the experience front to back. Think experience, don't think platform, don't think technology, don't think any of that. If you can work backwards from what you're trying to achieve for the customer, the technology, in my opinion, exists. We're not talking anything futuristic. Banking is not going quantum anytime sooner. In my opinion, it doesn't need to either, right?
Ali, you're a millennial and you're a young person, and you gave an example of what you guys enjoy. You don't enjoy a bank, but you enjoy your financial services from preferred from Amazon, or and financial has an over 80%, 85% favorability rate in terms of trust, while the banks, incumbent banks in China, don't actually have that. So, well, we do enjoy our non-banking financial services. Why can't our banking financial services be just as popular and lovable as the banking, non-banking guys? Amol, you're a banker. Wouldn't you like to be loved as you walk out? Just, hey, yay, here's my banker.
I mean, I thought this session was, you know, thrash Amol section.
No, not at all.
Anyways, I think, see, your point is valid. And again, I don't just bank with my bank, but then I bank with other banks as well. I mean, you know, what do you need from a bank, right? I mean, you just want to, you know, perform a particular transaction. You're not going there to have dinner or with your wife or with your girlfriend. Okay, it's not a spot where you know, have fun. You just need the service, and if that service is getting delivered to you without any hassle, at you know, if possible, at no cost, you know, there you go. I think then I'm gonna love my bank, isn't it? You get on your cards, you get your miles, you get cash backs, you get all of that stuff. You get lounge facility. Would you still not like your bank?
So why do you spend so much time, or rather, why do banks spend so much time on building brand and building customer association if it's all purely transactional? And I disagree with you. I think it's about brands, and it's about trust, and it's about contextual relationships, and it's about, it's about habit. I don't like changing my bank account. So for me, I have a sense of loyalty to my bank account because I've banked with them for the last 20 years. I'm sorry, I think it's beyond transactions. So I mean, that's my view. I'm just one person. But
I would say the reason why you've not changed your bank account, is it because genuinely you have that trust factor, or is it because frankly it's a pain?
It's a pain. It's a pain. the emotional cost of switching is too high, which also, going back to the SMEs, I work with the Dubai Chamber of Commerce, and the number one difficulty for a company to start up is opening a bank account. It takes good quality, decent companies 2 or 3 months before they can open a bank account. Now, that is a fundamental shift that has to happen. While you go into a China and you look at a QR code or into a facial recognition, and you have digital onboarding. I mean, how many of our institutions have digital onboarding?
No, but then Tariq, you're mixing it, right? You're mixing a retail to a you know, SME banking. Okay. SME banking doesn't happen with the, you know, facial recognition. For SME banking, you have to provide a trade license. And I'll tell you something, what we are working, okay, for that trade license, we need to make sure that the trade license is genuine trade license, and we're not just opening.
And passport in triplicate. And a wet signature.
So what we're doing, absolutely, wet signature, and that's what the regulation says, right? So what I am regulated. And if I don't follow the regulation, you know, the kind of fines regulators levy.
So I think the question around the room and for the audiences also is that we need to educate and work closely with our regulators to get them up to what the behavioral shifts are, where things are going, you know, where the trends are, and really get them up to scratch in terms of where the world is going. And I think sooner or later, regulators lag, you know, new innovations that happen in every industry. So it's not just banking and finance. Because it's money, it's a little bit stricter. And I totally understand that. But they have lots and lots of questions. I mean, what I'll do is I'll quickly read the questions out, and then we'll just agree on quick answers, and then we'll start wrapping up. We've got about 5 minutes to go. People want to know any new kinds of currencies, cryptocurrencies or whatever coming out in the future. So that was one question. Opening a bank account was another question. Why do you need big deposits for us to open bank accounts? This was again for microfinance. It is always the big people who get away, and we are bearing the consequences, okay? Do you think that new alternative revenue streams and cost reductions introduced by technology into banking processes will be able to surpass the pricing and the spread compression that is introduced by the new technology and more competition? Or will the industry just make more profits and just keep going over? Great question. Thank you for that. That was Leonard Lamb. Is mobile banking is the future? Yes, now. And finally, another question is, why so many banks in the country do not use Google Pay or Samsung Pay or stuff like that, and other bits of technology? So they were just a mix of questions that came through. And I think it's important that we just keep those questions in mind. Before people start disappearing, may I just do one little poll, because I think it's really important for us in terms of how well did we do as far as this whole process was concerned. So folks people who are still here, this is a webinar survey. It'll take you about a minute. Please rate us in terms of how this webinar felt like for you. I will launch the polling now. It'll take a minute, and then we'll do wrap-up comments from all our guests.
And Tariq, I'd like to respond to the lady from Standard Bank in Nigeria as well, if I have a minute.
Yeah, why don't you? Right now is probably a good time. Yeah.
No, I just wanted to say to her is that, look, rarely do banks look at customer centricity as a starting point for any journey, right? They look at a banking journey from a bank's perspective and fit it into a customer rather than the other way around. And I would dare to say that if you start looking at customers first and starting a journey evolving from the customers out towards the bank, meaning starting from a customer towards you rather than from you to the customer, then you will realize that your products and services look radically different, right? Radically different. And they would be much, much better serviced, etc. It's not about social media, it's not about listening to customers, but it's about starting fundamentally to redesign processes from a customer outward rather than from a bank outward. So that would be my view. I can, she can join me on LinkedIn and I'll send her some examples of how other banks are doing it.
Yeah, I will introduce you to her. She's a super smart lady, and I'm sure that connection will be very, very useful. Okay, so
to react on you, Feroz, those are the basic principles of design thinking,
Yes.
And it is amazing that banks are not adopting that. And in my opinion, and what Tariq and I discussed a lot, is Finance 5.0 is all personalized with AI in the background. That is where we are heading to. But if we are not combining that with design thinking, then I think we get a lot of chaos.
Yeah. I mean, look, the one thing that we do at Roland Berger is we have a design thinking location in Berlin. We run these sessions quite regularly on design thinking, predominantly to bring bankers and others into a room and just throw things on the wall. And you'd be surprised how many people go home thinking quite differently, quite proactively towards a kind of a different pathway towards solving the problems. So absolutely, you're right.
Okay,
right,
cool.
So
the webinar results came out. How many people would recommend? 83% of the people would recommend us and this sort of webinar concept that we are doing. So that's good. 53%, the largest number, would change nothing, but I think we always learn and develop. People found it relevant and impactful, and overall rating was good or very good. So I guess we did the basics right. So I mean, for that, I'm very, very grateful to all our panelists, and really would urge you to come and join us for the full program. It's only less than a couple of $100 with discounts and stuff. It's about $150. And you'll have 4 more of these, plus the bonus sessions, plus all of the additional elements that come in around that. And really what we're doing with the DIFC Academy in particular, and the financial community and the technology community in general, is really connecting the dots and pulling this thing together and doing it at a global level. So yes, we have a lot of regional players, but we also can connect out of Africa, India, UK, US, Australia. Emily Sidney Smith is going to be doing a session. She is going to be doing it from Australia. She's the head of EXO Works. Yaroslav is from Czech Republic. He's currently based in Spain. We have people, Dr. Terence from Cambridge University is based in the UK. And all of these people are coming together. We have some of our customers who have used some of our technologies before from Mexico, which is Interprotección. We are looking at Visa in Brazil as a case study on how we can take a big corporation and how they can pivot into new areas. We looked at that. TD Ameritrade, and when they were hit with Robinhood and people like that, what they had to do. So all of these kinds of people are joining us across there. About 20 people, 20 experts and minds will come together over the next 4 weeks to pull this thing together. So basically, folks, join us, help us to help you and work this whole ecosystem. Finance 5.0 will happen now. Hopefully we'll repeat it in October. And then we'll, depending on feedback and so on, we'll do deep dives. And perhaps this session can be done on a 2 days, executive programs, etc., etc. So I'll just go around the room and take a final comment, and then we can wrap up. So please do join us. You've got our websites. We will reach out to you. Over 250 people registered for today's session, so thank you for that. And we'll reach out to all of you also. Yaroslav, a quick comment before you leave.
Well, it was a great, very interesting content. Thank you to all the other panelists, and glad to meet everybody and looking forward to the full program.
Thank you. Thank you very much. And looking forward to you coming on and giving us a deeper dive in leadership and culture next week. So thank you. Thank you for that. Amol.
Yeah, I think banks are not going anywhere. But then for sure, margins and the fees will go. They will disappear.
Okay. Right. Banks are not going anywhere. Firoz, are banks going anywhere?
No, banks are going somewhere, I'll tell you that. But I mean, you know, all for the better, in my opinion, because I think two or three things we've learned. Number one is that we are going to be predominantly a touchless society for a little bit.
Yeah.
We will probably have more digital interactions, and we will probably settle in some sort of a norm. And that norm might be a mixture. It may not be all the way to one direction. It could be a mixture. So I think banks are learning to live in that environment a little bit better.
Yeah. Paul, any final thoughts?
Yes, thank you. First, all the panelists, appreciate your time and your insights. Looking forward to the deep dives. And secondly, Tarek, our audience are our heroes, and because they feel and see that getting some more knowledge about what's going on in the financial world is really important, not only as a business, but also personally. And lastly, please, our heroes, reach out to your networks and refer people to this program. It is a lot of learnings, and it will benefit you.
Thank you. Ali, with Microsoft, they are partnering with us on this and supporting us also. So firstly, thank you for that. Ali, any final thoughts before I wrap up?
I mean, I think the rest of the panelists said away. I think banks are definitely staying, and they're going somewhere. We're definitely being digital. I think the key is technology is available at every layer. You just got to use it. And no matter where you are in the journey, there is a technology available today that can empower you. So the quicker you adopt, the more agile you are, the greater the benefits you'll see. And this can have an impact across every single KPI, whether it's on the business side or on the cost side or on the tech side. And I think that's the future. That's what we're seeing. We just got to get on our horses and go.
Okay. Thank you, Ali. My final comments are, the first thing is that we can speak about technology and tool sets, but as we know across all of the people here, it's the mindset shift. It's that shift that's going to take place that is at the core of all of the changes that happen. Number two, I started the session with it, and I'll end with this, and that is the essence of trust. Trust has become at an even greater premium than it ever was before. and building trust in brands, in financial institutions, in transactions, and even technology. Today, I mean, a branch bank can burn down and we'll still trust the bank. But if the cloud connectivity breaks down or something like that for a week, we won't trust it at all. So our trust shifts are happening. And I think it's really important to really engage with trust and ethics as an integral part. And as we go into the future, I genuinely believe that we are moving towards a hybrid environment. We have spoken about it, and the hybrid will include tech companies, it'll include the large unicorns, it'll include some fintechs, and obviously the banks will still be there. So the new cake, I believe, will be a bigger cake as opposed to slicing the cake out. So I think as abundance grows, as information grows, as all of these elements grow around us, I think our cake is going to grow. Today, the world economy is around 90 trillion. Every 25 years to 30 years, it doubles. So it's going to double by the year 2040, 2045. Another 90 to 100 trillion dollars will be added in terms of value. That's the bigger pie. And that bigger pie can be shared out between the various people out there. So this is our journey. This is what 5.0 is about. This is a starting point for us. Please do join us. All the links are there. My colleague has been sending you all the links on the chat. We will reach out to you again. Connect with us, talk to us, join us, subscribe with us, and we'll take you on a wonderful journey. Thank you ever so much again, Yaroslav. Thank you, Amal. Thank you, Feroz. Thank you, Ali. And Paul, always as a partner, we're always here together. Here to serve you with gratitude and with goodwill. And God bless. Take care. All the best. Cheers.
Thank you. Bye-bye.
Yeah.